Hello, today is Sunday, the second day of August 2015. My name is Derek and welcome to this weekend's silver video. We'll start off with some top 10s. I put this up previously, which indicates which month is the best, not including January, for Silver Eagle mintage. And coming into this month, the highest was 5.79 million of October 2014. 2 months ago in June, third ranked, well, previously third ranked at 4.84 million. This July, 5.55 million, which means we're going to slip it into second place, or the second highest non-January ever. So this will go to third, fourth, fifth, so on and so forth. So the months of June, July, collectively over 10 million sold for months that normally don't have high mintage numbers. Now, as far as some of the 2 months collectively, I've got the top 10 list in play. So January, February of 2013 is the highest 2 months in at 10.87 million. And then this June and July was in at 10.39, so it was the second highest. And then moving further, going from or down to 8.5 million would be 2014 and at 2011, and then a bunch of 2014s and 2015s mainly along the way. Or within the top 10, only the fourth place finish here, and even the sixth place of 2013, I guess this one too, but 7 of the top 10 have occurred either this year or last year. Demand, of course, through the roof. And if you look at other silver being sold, if you can, I would be betting even higher rates of ascension than the Silver Eagles have been. They could only sell for like a couple of weeks this last month because they had to shut down due to high demand. In 49th place, which was the best of the previous decade, 5 2/3 million was March and April of 2009. The best decade of the 1980s was December of 86 and January of 87 at 4.4 million. The worst of our current decade is in at 89th place, which is December of 2011 in at 3 1/3, and the best of the 1990s is worse than the best this decade so far has to offer. Now let's go on to the charts. Let's take a look at the weekly and the monthly charts. For the week, price action stayed roughly the same, of 4 cents. And technically an inside week from the previous one, as this week's high was exactly 15, where previously it was about 15.04. And the low is significantly higher, or noticeably higher, than it was the week before. But overall within this chart, as I was saying in here, it was in a sideways consolidation within this down move, and it really needs to break above previous resistance, break below previous support to end the trend. It hasn't occurred yet. This 18 average is in a declining state, but so far what has occurred is a pierce above the previous low. It can very easily take it out, despite the fact that demand is at all-time highs. It could easily do it, because what is the fundamentals of this price chart? The fundamentals have very little to do with the actual physical commodity. When the derivatives amount that the big banks, JP Morgan and such, pop out, is all in a digital-based system. They can practically do whatever they want. So just because people want Silver Eagles and Silver Maples and Philharmonics and all the other kind of wonderful silver coins and bars out there, doesn't necessarily mean that that's going to reflect the prices going higher. I see this as a major buying opportunity, with the fact that when the shit hits the fan, holy crap, to get in at these prices compared to double, triple, quad, or even higher from that, which could easily have or be such. So yeah, so breaking down below this level, then you'd be setting new particular lows, and it still has to get above these key highs to even change the trend. Now, I talk about Fibonacci retracement on here, and within Fibonacci, I namely talk about the 38.2 and 61.8% levels. Well, I got the 15.4 and 23.6, and I'll use these numbers when it's been smacked down so far that even coming to these marks says it's got a heck of a long ways to go before you can give this into, oh my God, this thing is up so much. It's so far down, it's got a long ways to go. Finally, let's take a look at this on the monthly chart. For the month, it was down almost $1, or about 6%, as it was down 6% for the month of June. So June and July, 10 million eagles sold. So it was the second best 2-month period ever, and of course the price action goes down from about 17 to 15. Yeah, that makes a lot of sense. And within this chart analysis pattern, which has the 76.4, 61.8% level, this level here failed to hold, and now you have a resistance point in here, but within the bands, which is I think more important. From the breakdown, you hit the band in here, matching low. Hit the band, matching low. Hit the band, lower low. And then you hit the band where the lows were. And what we're seeing now to end the month of July is that it's breaking down below this, breaking down below the support. Well, where do we have? Well, we have support in at around the 10 mark, 11. Who knows what the JP Morgan and such are capable of doing. The lower the price goes, the higher the premiums will, of course, rise for silver eagles and such as we move further. And it probably is going to need to take news within the mainstream media of financial problems to get this thing up. But that's got to happen at some point, where the talk is about the dollar and how they print so much of it. The word fiat currency, which is not being spoken of such within mainstream, but at some point we'll have to do so. So anyway, thank you for tuning in to this weekend's video, and have yourself a great week. Bye-bye.